Has the ECB finally given investors what they want? Or is the package wrapped up in so many ribbons and bows, the market doesn't know what it's getting? Nick Stamenkovic joins me down the line to try and make sense of the latest ECB policy announcement. So Nick, as far as the widely anticipated bond buying is concerned, 60 billion has turned out to be the magic number. Better than expected, but do you think it's enough to prop up the eurozone economy?
Well, we've had a few rumours yesterday from various reports suggesting, they will buy 50 billion a month. So the actual amount is slightly higher than that. And the total amount up to September 2016 is around, 1 trillion or 1.1 trillion, which is clearly above market expectations. Significantly, Mr. Draghi made it clear, the purchases will be open-ended, and only when they see a significant shift in medium-term inflation expectations, will they step back from central bank asset purchases. So that's quite an aggressive move.
Shared loss seems to be the buzz phrase from the press conference, something which some national central banks, such as the Bundesbank, likely won't be a fan of. But what was your biggest takeaway from today?
Well, there have been a lot of talk about shared loss, that Mr. Draghi tried to play that down, saying QE was different from outright money transactions. But the impression you get from the details is that the buying will be basically 80% of it will be shared across the national central bank. So in the event of a default, taxpayers would foot the bill, and only 20% wouldn't be shared. So I suppose that gives the impression that the Bundesbank has given a little bit of support on its view, and clearly this area of the announcement helped ease some of their concerns. What was significant to me was the fact they're buying bonds, sovereign bonds, across the whole maturity curve. Most people are anticipating between the 2 and 10 year. The fact is they're buying up to the 30 year, and we've seen a significant bull flattening of the yield curve in Germany and peripherals. That is, the longer end has outperformed the short end, and that was unanticipated. So to me, that is a significant thing.
Spanish bonds jumped to attention after the announcement. Even oil rose. Is this the big bazooka Euro stocks needed, especially after the SNB's action, or is it just a knee-jerk?
Well, it's interesting. We saw a positive reaction on equity markets initially, both in the US and the Euro area, but that seems to have dissipated somewhat. So, markets are not convinced that this measure will turn the economy around decisively, whereas the bond markets initially sold off on the initial headlines, but have rallied back very significantly. And the peripheral markets have seen record 10-year low yields in both Italy and Spain, and a significant flattening of the curves there, as the market anticipates the ECB buying yields across the curve, and hence the continued pickup desire for driving people down the curve and forcing them to extend duration. Other details are still being digested by the markets, but the impression at the moment is that it's been pretty favourable, but we'll have to wait and see the longer-term response in terms of the economy further down the road.
And taking into consideration everything we've discussed, what is your outlook for the single currency, especially ahead of next week's FOMC meeting?
Well, we've obviously seen a very significant move, in the last few months. The ECB's made it quite clear, they want a weaker euro to help exports to try to drive inflation up in the medium term. The Fed, by contrast, if we should see next week, is slowly but surely moving towards hiking rates, unless the US economy takes a decisive dip, which is not my opinion. So I think the euro has tested 11-year lows this morning, and I think as the details of the ECB announcement get more digested, and as the US economy continues to perform well, I think the euro continues to fall. We could see parity. I don't think we'll see it immediately, but I wouldn't be surprised if we saw it at some time during the course of this year, if not 2016.
Nick, pleasure to speak to you as always. Well, viewers, as markets continue to digest the news, stick with us here at Dukascopy TV for the latest currency movements.